Good evening all, hope you're doing well. We are in a state of caution. We were euphoric all week and now we've come to a caution as you can see. So the technicals have really fallen. We were really quite bullish yesterday and now they've dipped a little bit and also the herd have gone slightly long on the 24-hour difference. However, the big picture view is that they're still very bearish. There's all right, so that's the technical scores pumping. So see that flip there. So we're now in complacency. Okay, so what's that? It's likely the Dow Jones, possibly. Apple's going positive, so it could be that. Probably it might have been Apple, but yeah. Anyway, so we're back green. So, like I was saying, we are very much risk on because the big picture is that there's loads of bears. There's 28 bears versus the one bull, which is ludicrous if you think about it. But it is what it is, and we are in uncharted territory right now because we've been doing this risk calc for 3 years. Yeah, about nearly 3 years, and actually no, it's been longer than that because we covered it for COVID. But yeah, but about 3-4 years, and we never got this extreme before we had that COVID crash. So we are sort of entering uncharted territory, and I think it's likely possibly from the crypto guys. Their sort of mentality and their approach to trading is to trade without stop loss and to get margin called and then exit, or alternatively fund their account and then hold on to that trade. And that what's something that we could be seeing on the indices. Remember that we're just looking at FXCM for the indices, so it's possible the crypto guys went over to FXCM. But it's definitely helping identify why things are pumping because of the sentiment. So even though we're just looking at FXCM in a vacuum, it's proved to be very, really powerful. And it might just be the crypto guys have moved on to it, but it has been useful. It's been really accurate for how long we've been green. Look at the indices now; we're at all-time high. Dow Jones hit 40,000. We dumped again. So there is something definitely a little bit funny going on right now. Okay, could be the Nasdaq maybe. Um, yeah, so the indices are sort of fluctuating back and forth, and there's caution. So we could be potentially caution tomorrow, but it will depend on the technical scores because what we've got green, green, red. So we're not going to have like a mega bullish indication tomorrow, and we could theoretically have red, green, red. So we could just be in this state, pending what the technicals do, but we could potentially fall because of that. They've gone slightly long, and so come down to Thursday, and see there's been a bit of a change on DAX and a UK 100 as well. There's also been a change on GU as well, which is of note. They weren't long and now they're net short. Okay, so bear that in mind. Cross yen are buys, so that's a little bit boring. And so there's the pound here. So if you're looking for trade ideas, just look for something that's teetering here. That's the shifting. That colour's the shifting. So we know that the pound should, in speech marks, be a decent buy, but perhaps you might not want to trade it against the USD. You might find it a little bit easier perhaps against something else, but we just know that the pound should be a strong buy because they've sold it, and normally whatever the herd do, they'll get reversed, and also the New Zealand dollar as well. So come to the rate of change, and the pound Swiss could be a good one. So what you could do is look at open a pound Swiss chart, and then what you want to do is try and get the high time frame to match the low time frame, and then you can look for trade ideas. So look, we can do this now, and so if you've got a high time frame for bias and then a low time frame for entry, that could be quite nice to get the two to agree. And so high time frame, I would say consider 4 hour. Yeah, so that would have been this morning. Obviously, it is late now, and I'm going into this resistance. So, had we had done this yesterday, it would have been okay. 1:14:13. Yeah, it's moved quite a bit, and that's the rate of change. Okay, so this is how you can use it. So, if you're looking for trade ideas, just come to any one of these tabs, and then it should have lots of ideas that you can definitely have a look at, toy around with. And anything that hasn't moved, you could potentially avoid. But anything that's sticking out like a sore thumb, it should tend to be quite accurate. So this is a buy because they've sold it, and this would be a sell because they've gone long. They've longed it. Okay, so that's sticking out like a sore thumb, and it could be a little bit late to enter because it looks like we might be overcoming this. You could look for a pump and a retest, and then that kind of move, and then pending that we had that bounce, then you can look for low time frame for entry. Here's obviously a nice area. That would have been horrendous, absolutely disgusting. So that would have definitely stopped you out. Yeah, so that must have been the SMB interest rate decision. I think, what's that, Friday? Normally BOE has their things on Thursday, so that's probably an SMB thing. But anyway, that's how you can use it. Rate of change is a good tab to use. And any questions, just you can let me know if you've got any queries about anything. Maybe you've got a question on this. It's worth noting that the dollar yen is veering away from AJ, EJ, and pound J. So that's telling us that the dollar is moving away from its peers if we use yen as a proxy. Because what happened is that the dollar yen was moving in parallel to the EJ, the euro yen, and they had a strong correlation. And now that correlation is breaking down, so the dollar is moving away. It doesn't necessarily say it's going to be getting stronger or weaker, but there's definitely something that's in play right now where we have seen a deviation and a movement from dollar from its peers. So it could be indicating weakness. If you think about it, let's look at, see, the euro yen and the pound yen are moving in parallel. EJ is moving with AJ and GJ. Okay, so there's obviously these three are working together, but the dollar is not invited into that party. So that could be telling us something about the dollar. Okay, and we could be seeing a little bit of weakness, to be honest. Okay, so that's how you can use the correlation analysis. So loads of stuff on here that you can use, and don't forget we've got a 7-day free trial as well, so you can have a look and see what you think. And that's that. Okay, so let's talk about the indices. In fact, we'll come to Discord because it's a little bit quicker. And the treasuries were bid, so that sent the dollar a little bit higher. But we have to look at the big picture. We just have to look at we've been quite red over the week. So is this going to be sustained? We'll have to wait and see. Okay, so DAX. DAX is of the most interesting because what had happened is that we've seen this squeeze, and that could tell us one or two things. It's that they've gone long or they've gone less short. Okay, and that's likely less short is that they were short all down here. This move absolutely pulverized them and kicked their butts completely, and they had to exit. So this is what I think it was, is that these guys were short and they had to exit. So it could be people buying up there, but I'd say that was highly unlikely, and it's actually like an exodus of bears. And I was saying that we needed an extinction event on indices. So we may have something next week because we've got our FOMC, and we've also got a Yellen speech as well. And normally they're not penciled into the economic calendar. She just speaks like ad hoc. So if she's due to speak, it might be something of note. It might be a market mover, and she is Treasury Secretary as well. And also we've got a Powell speech on Sunday, so that's slightly unusual. So we may be seeing some market movers from Sunday up to FOMC, which is Wednesday, and so that's it. So hopefully this comes down, and then, you know, this is like a decent move, and then we can potentially even go into into, you know, where we're actually going to get a really good entry for a long, but we'd want to wait for them to be completely flushed out first. And the danger is that if it falls, the bears are going to be very quick to sell. If they come in and sell, up will come. And so this is the catch-22 situation. We want the bears out of this situation. We don't want them entering. If they enter, we'll just do this, and, you know, and then we'll zigzag, and up we go. Right. So that's that. Ideally, we don't want those guys selling it. Okay. And of course, we had the all-time high, 40,000. Probably a ton of stops, to be fair. They've actually sold there. They sold right at the all-time high. So of note, you'd think that would be less short, but they actually added short, which is really weird. So it could be those crypto guys just screwing things. Oh, that might be Andy. Yeah, he's right. I know. Yeah, Andy's a DAX trader, and he's been trading it for many, many, many years. Maybe as long as I've been trading, and I've been trading for a long time, and he hasn't seen such awful, cruel moves like this, and I never have either. And I think it is mostly sentimental driven in order to get the dumb money out. Because when I was trading indices long time ago, would never see these outrageous moves. So I think what's happened is that we've had an influx of retail traders, and the dumb money has skewed things, and it's skewed the market. And so this is what that is. So I'm going to just put a thumbs up there. I agree with him. Then I'm going to reply after this video. And so pretty much, you know, they went long, so we should be below that box. But it's a terribly thin box of S&P. Okay. And there's yesterday's pump, sold it, you know, boom, God, and it really went for it. And now they've gone less shorts or long, you know, one or the other, so we should be below. And then lastly, gold. Robot's going fine, by the way, and we're just, you know, slow, steady progress, basically. So there's set up for a buy. Set up for a sell, no, for another buy because they sold it. We did chop though, admittedly. See that back-to-back red, green candle or blue candle. Up we go, and them going long, and that's the last development. That's the last crossover. So as it stands, we should be below that box, but I think they're probably going to sell it, and if they sell it, we could easily break that box. And that's it. So we'll wrap up now. This wraps up a weekly, you know, bulletin, and we'll be back on Sunday. Don't forget, I fell off my bike, so even typing on my phone is actually quite painful. So I've had some painkillers. They're quite strong, so I'm going to be taking it easy this weekend. But if you've got any questions about the sheet or anything like that, if you want to join, let us know. And I welcome you to the QDB service. So any questions, I won't mind at all, and we'll speak to you soon. And I'm going to reply back to Andy about DAX. So have a good evening, and I'll be back on Sunday for the COT data.